Hi, I think it's time to talk about the stock market. And today's date is 14th July 2024. It is a Sunday in Singapore. And right now is 10 a.m. in the morning. Um, I have been a father of two for several months already. And that explains why I have been busy with my family commitments, and that's the reason why I cannot update my this stock market trash talk series regularly. Without further ado, let's get started. And I should go and look at the stock market right now. Oh, by the way, today is a Sunday. The U.S. stock market is not open. But nonetheless, we can actually look at the S&P 500. Okay, S&P 500 right now is at VOO is at $514 per share right now. If you want to see the year-to-date return, the year-to-date return for the VOO is, which is here, which is 18.6%. Okay, from the start of the year till now, VOO returns about approximately 18.6%. All right, and the index, the S&P 500 index is at a 5,615 level, and this is a very extraordinary return for a index. And this pales in comparison. I mean, this S&P 500 index return has left the other indexes in the world in dust. All right, so several stocks I would like to talk about in this podcast. Berkshire Hathaway, the Berkshire Hathaway B share is at $424 per share, and the A share is at $640,000 per share. And Markel Corp is approximately $1,600 per share. And the other one is ARKK. ARKK is at $46.8 per share. And the year to date for ARKK is actually at a negative 10.65%, despite the S&P 500 has returned close to 19% per year. So the ARKK fund, which is a very good emblem of the growth, the emblem of the growth stocks, which had a very very bad year-to-date return compared to the S&P 500, which means those who chase after the frenzy of the growth stocks, they are still, most of them I would say, they are still trailing the market, all right, by a huge margin, and they are probably losing money year to date. And yeah, the year-to-date return for Markel Corp is about 12.5%, which trails the S&P 500 index. What about the Berkshire Hathaway? Okay, Berkshire Hathaway, it depends which type of share you are talking about. The B share is actually slightly above the S&P 500, 18.5%. Okay, which is 19% for Berkshire B, and Berkshire A trails the S&P 500 by a little bit, not a lot. So the Berkshire A year to date is actually at 17.8%. All right, and last but not least, let's look at the U.S. 10-year Treasury. Okay, U.S. 10-year Treasury note is at 4.187% per year, which means if you you buy into the US 10-year treasury note right now, they will give you a 4.18% per year for the next 10 years. All right. So this is a very important indicator, or this is a very important um, stock market indicator. Okay, usually when the US treasury note yield is rising, the stock market will actually come down correspondingly. Uh, the reason is um, this is actually the risk-free rate you are getting from the US government. And if you can get 4.2% per year, and you wouldn't want to risk your money in the stock market. That's the reason why, in order to compensate for the risk in the stock market will actually come down. All right, as the 10-year treasury yield increases. All right, so that's all for today, and thank you for listening to the podcast or this stock market trash talk series. Uh, and last but not least, just an update on my own portfolio. My own portfolio has surpassed a major milestone, and my goal is still towards the 1 million US dollars mark. And if I ever reach that at some point in time in the future, I will gladly announce that in due time. So thank you for watching, and bye bye for now.